Good morning, everyone. Happy Monday. On behalf of BEMA and the Membership Value and Engagement Committee, thank you for joining this preview of BEMA Intel. To those of you that I've met in the industry, hello again. For those I've not met yet, I'm Marjorie Hellmer, president of Cypress Research, the firm responsible for BEMA Intel's data compilation, data management, and visualization platform. And I will be moderating today's panel. Cypress has had the pleasure of working on the development of this initiative with a great team of industry professionals that includes BEMA members and its industry allies, and you will be hearing from them throughout the webinar. Let me start with a little webinar housekeeping. We would love for you to participate directly in the webinar by asking questions via the chat feature. We are saving time at the end for Q&A, so please participate with us and ask your questions. Also, feel free to enlarge the image of the PowerPoint slides on your screen so that you can easily see all the data details that we're going to be sharing with you. When today's webinar is complete, you will receive a quick survey about your experience. So send us your feedback. This way, BEMA can continue to bring you the quality content you and your business needs. And lastly, BEMA's webinars are recorded and they are posted on the website a few days after each event. So be sure to share with your colleagues and let them know that they can view this on demand. So with those details taken care of, I would like to lay some basic groundwork about the BEMA Intel platform before introducing our panelists. BEMA brought our team together with the goal of creating, for the benefit of BEMA members and allied industry professionals, a data graphics platform to help you quickly understand the business climate in the U.S. commercial baking and equipment manufacturing industries. In short, these are data to help make your business better. Today, our team will outline for you the components of BEMA Intel, including a preview of the platform, the original inspiration for creating the data graphics platform, and ways that monitoring and analyzing these data for your businesses is helpful, not only for baking equipment industry professionals, but also for commercial baking and baking ingredient executives. I would like our 5 panelists to introduce themselves by sharing your name and your company name. And will you also briefly share with us why you thought it was important to develop BEMA Intel? What need does the platform fill? And Tim, would you kick us off?
Sure, Marjorie, thank you very much. My name is Tim Cook. I'm the CEO of Shikastev and Vice President at the Linksys Group. Let me start by saying, Marjorie, that I'm very excited about this project, primarily because it fills a great need that I have always had to be able to explain to our stakeholders the current economic state or health of our baking industry. As leaders, we're expected to understand what's happening in the economy in which we're operating. And it's very easy to get data on the economy in general, but it's less accessible. Data is less accessible that is specific to our baking industry. And so with BEMA Intel, the hope is that we can fill that gap between what we see happening in the economy at large and what is specifically affecting our baking industry. As we know, those two do not always mirror each other. And so having specific intel that speaks to the current health of the baking industry is critical.
I can go next. My name is Jason Ward. I'm the president of AMF Bakery Systems here in Richmond, Virginia. And what Tim just shared resonates with why I think this is such a great tool for leaders and companies in our industry. There's a lot of publicly available information out there, but it's not always organized in a way that gives you good insight and visibility into the factors that affect the future. We're all really good at explaining why we got the results we got in our business and what happened in the past. But what is much more difficult is getting good data to help us plan for the future. So I think combining these broader economic indicators with some specific industry indicators, and then putting that together with the knowledge and point of view of industry participants, suppliers, that's what really creates a lot of value. And I'm excited to see how this develops.
Good morning. I'm Jennifer Lindsey. I'm Global Vice President of Marketing for Corbion. One of the reasons I was excited to join this team and be part of this process was this dashboard is really relevant and significant as a business tool to give some high level and some more granular detailed information as to what is going on in the industry as a whole, but also overall in the market and how that impacts the buying consumer. This helps you connect the dots to any of the business strategies that you may have and the tactical execution that you may need to iterate and adjust based on what the market dynamics are. It's essentially a real-time validation of your strategy and how you can execute against that. So what you'll see when we go through this overall is you'll see an entire representation of the value chain, starting with what we're seeing in terms of consumer drivers and how the overall market and economy is impacting them, which leads to how they're able to use their purchase power, and then how that affects the actual bakery manufacturers, how that will, in our case, in fact, affect ingredient suppliers and the needs that they need to address, and also if in manufacturing of equipment, how that pulls on the needs for various types of equipment or activities that you're seeing overall in manufacturing. So I just think it's a really helpful tool to start using that connection.
I'm Paul Lattan, and I am a publisher of Commercial Baking, which is part of Avant Food Media. And I think my perspective is the longest on this exercise. I was around 12 or 13 years ago when we started the BEMA Index. And that was actually a process whereby we asked members to report their actual sales data and units sold. And that never really got any traction because I think it just gave too much of a look inside of people's businesses and their sales. And we just couldn't really get any positive momentum on that. And I think this model is a much better model in that it's broader in its scope and it doesn't give any reason for anyone to give up any confidential data or any data that can lead to anyone figuring out what their individual sales are. So this is a much better, more sustainable effort, and I think that we're really going to like the data that's provided here.
Hi, I'm Josh Saslin, president of Sosland Publishing Company. I became involved in the project when I heard Tim was trying to put together a robust and valuable set of indicators for the baking industry. And I was excited by the idea and to be part of the project. Jennifer used the phrase connecting the dots, and in our editorial work and mine for the last 35 years, really putting dots on paper for the benefit of the industry is what we do. And some of the data we publish are backward looking, some are forward looking. And I have to confess that we have really had the sense that while we work hard to help our readers make critical connections, to connect the dots, that not all the data are used to their full potential. So the idea of contributing some of our data to help create a tool that will be of great value to the bakers and the allied suppliers is exciting to us. And so we too would applaud the industry for doing this and look forward to being part of it.
That's terrific. Thank you, Josh, and to the rest of the panelists. Well, why don't we take a quick look at the three components then of BEMA Intel. Industry Indicators presents the 30 pages of detailed and current and historical trending data graphics for the key Intel indicators. Now, this is your deep dive section that allows professionals to monitor quarterly or even multi-year changes in these key indicators. Member Pulse presents quarterly changes in a confidential survey of business and industry outlook measures exclusively among BEMA equipment manufacturing members, including quarter-by-quarter data graphics on equipment industry measures like general business outlook by channel, so retail versus food service versus industrial, etc., and quarterly bookings related data. Intel Summary is an at-a-glance summary of quarterly changes in the indicators that are being tracked. And this is the third Intel component. It enables you to quickly grasp the state of commercial baking and equipment manufacturing industries, all on a quarterly basis. Now, taking a look at the BEMA Intel indicators here on your screen, I'd first like to give a special thanks to Tim, Josh, and Jennifer for really helping refine these indicators and the way they are presented. We also rely on Josh and Milling and Baking News for some of the original baking industry data held here on Intel. So just a special thanks to the three of you. I would like to turn to our panelists. Tim, Jason, and Paul, now that we are all viewing the set of indicators, will you kind of describe for us why the team selected these particular indicators? Maybe starting with you, Tim.
Sure, Marjorie. As you can imagine, when we first started this exercise, there was a plethora of information and data which we considered and which could have been helpful in this study. And so as we began weeding through the various the data available to us, we really tried to focus on a few aspects. Number one, it needed to be specific to our baking industry. Number two, it needed to be impactful. In other words, there's a lot of data related to our industry which may not be impactful enough to really convince us as leaders of our businesses that it's going to affect the overall state of the baking industry. So it had to be information that was impactful. And then I would say one of the other factors is that it needed to be information that we could all use. So in other words, not so specific that it only spoke to ingredient companies or packaging equipment companies. It needed to be data that was relevant to all of us, impactful, and yet specific to the baking industry.
Yeah, you're spot on there, Tim. I mean, I remember a lot of discussions about how do we zero in on the essential few indicators, because we all know that more data is not necessarily helpful. So we looked at what are the indicators that we believe most accurately reflect the health of our customers in the baking industry. And by health, we're looking at future profitability, growth prospects. You know, what are those indicators that tell us that things are good now and going to get better, or they're good now and there's risks ahead? Because that's what we're really trying to accomplish here as suppliers, to have a point of view based on data of where our customers are going, you know, and their likelihood to invest and spend to support their businesses in the future. You know, a lot of these indicators, when you look at them, are self-evident or you know, or straightforward. But the fact is, as Tim said, we started with a very large amount of data and information to choose from. So it was all about drilling down to the most important few.
Right. Thank you, Jason. Paul, you know, if you were to answer the question that some of our webinar attendees might well be asking themselves, which is, what's in it for me? You know, how can BEMA Intel help me in my business? What would you say?
Well, I would say that we get over my time in BEMA and as a media provider, we get a lot of questions about data. People want to know where the trends are heading, where things are going, and a lot of that data is available, but I think it gets lost in the noise and it's not really curated in one place. And so I think this is going to give people who run businesses a much better way to sort of look to the future and see where things are heading and help them manage, for example, their raw material needs. You know, if they're heading into a growth phase, do they have the necessary materials to deliver their orders? Workforce and staffing, do they need to go up or down based on where things might be heading? For equipment manufacturers, lead times, are they going to get in a situation where they're going to have longer lead times because the industry is picking up? And then the obvious one is just forecasting and projecting. I think that businesses do that on a regular basis, and having this to sort of give them a quick look at where things might be heading, I think is a big help for them in being able to do quick on the spot projecting and forecasting where their business is going.
Yeah, great. Well, we've talked about the platform for a bit. It seems like a good time to move directly to a view of the summary and continue our conversation. And so here we see the first page of the summary for Q3 of 2020. On the left side of your screen, in the gray, are titles that correspond to the data to the right, all from different sources, some from the BEMA Equipment Member Pulse, some economic and business data. And then at the bottom, we have IRI bakery sales trends for the packaged and fresh bakery segments. Now, all of the data are color-coded, green, yellow, and red, for a quick indication of whether the quarterly data are trending positive for the industry or not. So, of course, green equals good, yellow is neutral, and red means a negative industry impact. So, Jason, can you share your thoughts about the helpfulness of the data and what you are seeing as a business leader?
Sure, Marjorie. I mean, obviously, this is a high-level snapshot. We all understand red, yellow, and green, so it's really at a glance, how are things heading in the industry? And as we talked about before, are there reasons to be concerned, or are there reasons to be bullish and positive and optimistic? And you can see here a lot of green on the high-level indicators, and then you flip over to the quarterly bookings or the expectation, and you can immediately see from one quarter to the next a pretty dramatic change. And we all know that this is COVID driven in many respects, but you can see a significant improvement there. So, I mean, the way I look at this is I'm trying to corroborate what I am hearing from our customers, from our customer facing teammates about the marketplace and the dynamics and expectations going forward. And with this snapshot at a high level, I can begin to do that and then start to drill down into the details.
And I would just add to that, Marjorie, this puts together in one place, as Jason said, at a high level, but in one place, data that I might otherwise have spent a considerable amount of time pulling together. And it presents it in such a way that at a glance, you can understand what the major forces are happening in the baking industry, the economy of the baking industry. And so I would just say from my perspective, this information, this slide is information that I will start including in my presentations anytime I talk about the state of our business and the health of our baking industry.
Right. And we shall see how Q4 ends up trending. That's really the beauty of this. We are doing this on a quarter by quarter basis. And so we get this constant monitoring or mirroring of what's happening in the industry. So I'm curious, Paul, any thoughts on what you are seeing here?
I just like the ease and how easy it is to navigate this, and the look and feel is really great. And if you just look at the package versus fresh area, you can see, okay, we're in the third quarter, we're still in a pandemic, maybe going deeper into the pandemic, and you can see that package is up sharply, and you see fresh is down, which is obviously very predictable, but this confirms that. And just to have this at a glance at any time is just a great resource and a simple way of getting a feel for where things are heading and confirming, what you may already know.
Right. Well, and highlighted on page 2 of the summary are, again, Q3 trends in key ingredient and energy costs, as well as labor, all color-coded in the green, yellow, and red for easy interpretation. Josh and Jennifer, from your perspectives, what do the trends on this page reveal? And Josh, if you'd like to share.
Sure. Right. So I think I'll comment on ingredient costs, which is something we devote a lot of time to. Attractive ingredient costs can be a wonderful tailwind for bakers. And conversely, unexpected spikes in commodity prices can hurt or really even ruin a year's financials. And unlike, say, labor cost trends, ingredient prices often move in surprising and difficult to predict ways. So it's really important for the baking industry and allied suppliers to track. The whole purpose of this exercise is to offer you a snapshot, a meaningful snapshot. And that's challenging with ingredients because there are so many. And different segments of the baking industry have different priorities when it comes to ingredients, and the prices for the ingredients don't always move in the same direction. So relatively speaking, flour is everything to a bread baker. He or she probably doesn't care so much about cocoa prices. The indexes Marjorie is showing offers a weighted estimate of ingredient cost changes in major baked food categories based on standard formulas. So if flour is up and shortening is down, the change shown is a weighted average reflecting how much flour or shortening is in the end product. And you might be interested that our retired editor, Lori Gordon, put these formulas together about 20 years ago. The bread formula is more heavily weighted to flour, and cookies are more balanced between flour, sugar, and shortening. So that's how these work.
Mm-hmm. Great.
And I'll jump in just to speak to the energy costs and labor. So if you think of this as a puzzle, and you have different puzzle pieces, and they all impact one another. So if we would think pre-COVID days, the energy costs being down right now, and in particular reflective of diesel fuel, traditionally that was a positive indicator to the industry because, of course, those costs for fuel were down, and so that's more favorable for manufacturers for transportation of goods. In this case, while that is true right now, it's being offset by, you can see that labor is in yellow. And diesel fuel right now, although positive, we have a situation where we do not have available truckers in order to transport that equipment or those finished goods or ingredients across the United States. So it's a mixed picture here, that favorability on energy, but we are experiencing some tightness in the labor market for, in this particular case, truckers being able to transport, and also labor and skilled labor at manufacturing sites in order to get products out the door. And all of that is a direct reflection of what we're dealing with COVID.
That is a great point. The final summary page presents thumbnails for the third quarter change in dollar and unit sales from a year ago for key packaged and fresh bakery products categories. So I'm wondering, again, Jennifer and maybe Paul, can you put these third quarter changes into context for us? Maybe starting with you, Jennifer, some of your thoughts?
Yes, sure. So again, I go back to my puzzle piece analogy. So if you look at the categories that are traditionally very strong in commercial packaged goods, what we tend to refer to as center of store, you see both the actual revenue numbers as well as the unit numbers are positive, indicating what we're seeing in this COVID pandemic, that food service is down and consumers are being pushed more into retail in order for their food purchases. In addition, what you're seeing here, for example, in pastry and donuts, this is a combination of packaged and fresh. So you're seeing that overall you have a slight increase in sales amount, but you have a decrease overall in volume. This is a combination that in the in-store bakery, or ISB, which is the fresh products that we're talking about, those are actually experiencing steep declines due to COVID. Whereas you have some compensation with this combination in this category because retail packaged donuts, for example, and pastries are up slightly in sweet baked goods. So it takes that puzzle piece mentality to kind of put the dots connecting. However, with this dashboard, you can drill down into specific categories and get more detail and more information so you can put those puzzle pieces together.
That's
I don't have a whole lot to add to that other than, just to be cognizant of these various sectors of the industry and really look where the growth is and where the challenges are, and obviously make adjustments to your business and to your go-to-market based on how those positive and negatives might be playing out into the future.
Right. And we did try to select, key categories where we can see some of those big movements within the baking industry. Thank you, Jennifer and Paul. So we have just reviewed together the standard format for BEMA Intel summary so that our viewers have a feel for that. And I should note that at the beginning of each new quarter, BEMA will be releasing an updated 3-page summary. So why don't we move our discussion to the member pulse survey? So again, Member Pulse presents quarterly changes in confidential survey measures received exclusively from BEMA equipment manufacturing members. So on the first page here, Tim and Jason, can you sort of talk about the process of developing the equipment member survey to capture on a quarterly basis some key measures that reflect the health of the baking equipment manufacturing industry and kind of highlights of what we're seeing a little bit here for Q3?
Sure, Marjorie, I can start. Obviously we just reviewed the value that comes from organizing these broader economic and industry specific indicators. But the challenge in all of this is then adding, that direct feedback and insight from suppliers and member companies. That's a challenge because, as Paul referenced before, people don't want to share confidential information, nor should they be expected to. So you can't ask for too much detail or you just won't get feedback. Then again, if you stay too high level in the type of information that you're asking for, it won't be actionable or useful as a tool. So, what we tried to take great care in doing is to thread that needle a bit so we get good directionality with enough detail that it's meaningful and actionable. Because that's what this is all about is, as I said before, corroborating what we think we know is happening in the industry, where we think our customers are going, and then to get this, this additional validation, either a validation or a correction of our views, is very helpful from a planning perspective. And so the key going forward really is to continue to increase the participation. The more input and data we get from members, the more valuable the tool.
Yeah, and Marjorie, I would say, first of all, Jason hit the nail on the head. That's exactly what we have here. And just to underscore what Jason said, it's valuable to me as somebody who focuses, for example, at Chick-a-Stev on the front end of a bakery production line. My business may be down, but that doesn't mean that all the other equipment suppliers are having a down year as well. And so the sense here of how suppliers are feeling about the state of the industry and whether orders seem to be increasing or decreasing is a good indicator for me that what I may be experiencing at my company is not necessarily what the broader industry is facing. And that's helpful just in terms of context about the state of the industry. Right.
Well, as we continue, we can see company outlook for equipment manufacturers for the next 6 months, segmented by the channels that manufacturers sell into, all for Q3. Q3 is in the top bar of the pair for each channel compared to Q2 in the bottom bar. And again, Jason and Tim, color coding in green reveals quite a bit of positivity for some channels, but we also have some significant yellow and red for a somewhat negative to very negative outlook in other channels. And between some of the quarters, Q2 and 3, we can see some channel recovery also.
Yeah, I think, Marjorie, the two things about this that I really like. Number one, the breakdown by channel, because we really experienced during this COVID crisis that different channels were affected differently. The food service channel was hit dramatically hard by COVID, whereas the retail side saw a spike in business after a short decline. And so it's very important to make that distinction, but also just the simplicity of being able to look at red, yellow, and green and very quickly assess the state, I think, is valuable to all of our members.
Yeah, again, I mean, the focus on channel is very important. If my business is heavily reliant on the food service side, to be able to quickly see the relative trends and outlook for that channel, obviously important. I think Tim makes a good point. I mean, it's particularly interesting that we're starting this with the backdrop of a global pandemic. I think if things were more stable and there wasn't much change from quarter to quarter, it'd be more difficult for people as we launch this to see the power of it. And in fact, I mean, everyone can look at this right now and connect that to the experience we're all going through. And I don't know about everybody else, but I'm very anxious to see next quarter and interested to see how things continue to progress across channels and within the industry. So I think it's nothing we planned, but also kind of helpful to bring this to life in a pretty visible way.
Yeah, it's true. And I do want to point out that Cypress Research conducts this online member pulse survey each quarter. And it's important that we do, as Jason said, get full participation from equipment manufacturing members so that it really represents the full industry. Paul, as a longtime BEMA member, and I know an avid user of Research Insights, any thoughts to share on the importance of member survey participation?
Sure, Marjorie, thanks. Jason touched on this earlier, but obviously participation is key to this. I've heard so many times over the years people wanting this data, but in order to get it, you got to give the information that is needed on a timely manner. And so there's an old BEMA saying, you get out what you put in. So please be cognizant and fill this data out in a timely manner. We're not going to be satisfied with anything that's less than 100%. And so we want full participation on this. So please give us the data so we can give you the data back and you can use it for your business.
I'm smiling with what you said, Paul, because it's a lot more effective for you to plug the survey than to hear it from a researcher like me. So thank you.
Anytime.
We have discussed now BEMA Intel's summary and member pulse. So what I'd like to do is take us to the platform, and so that we can take a look at a few of the industry indicator graphics right in the platform itself. So give me a moment here. So here we are live on the platform, and please remember the industry indicators report is that 30 pages of detailed current and historical trending data graphics. All of these are top-lined in each quarterly summary. So the first page of industry indicators is a clickable table of contents. You can click on any heading or subhead and go directly to a specific data graphic, or you can also simply just scroll through the 30 pages. But let's, for the moment, go to the CPI for food and bakery. And what we see here in the gold line is the percent change in the consumer price index for bakery products from the corresponding month of the previous year, beginning in January of 2018 through the end of Q3, which is September 2020. And for comparison purposes, the green line on your screen is the CPI for all food at home for the same time period. Jennifer and Josh, we have had conversations about what this is telling us at a high level for the relative health of the baking industry. Jennifer, what are your thoughts?
So this data, as you mentioned, Marjorie, is meant to be high level and it's directional, meaning it gives some context or framing to the overall consumer market from a retail food perspective. I want to call out that out of home or food service is not captured in this data. However, you can infer two sides of the coin because we know pre-COVID that it was pretty close to 50-50 with consumers eating out of home or in food service and also purchasing food at retail. You can see from this data here, there was a sharp shift due to COVID and the pandemic. So if we focus in and look at what happened right around March of 2020, we know that that's approximately the time mid-March when the pandemic took full hold and consumers were pushed more into retail and out of dining outside in food service. You see overall that there have been some price increases in overall food, and that bakery itself was able to capture some of that, but not to the full extent of the overall food market. And there is sub-industry significance in that you could drill down into, because again, the green line is an aggregate of all food. And what you're seeing here is, although bakery could capture some of that cost increase, potentially they couldn't capture everything. So maybe that's where you drill down and understand more about where the raw material price increases and spikes. Were there labor costs that increase that maybe not be able to be fully captured and passed on to the consumer? And then you look at this and you compare to historical data. In historical data pre-COVID, you see overall that bakery was able to capture some price increases and more than overall food itself, because you see that the lines actually, the gold is above the green. And there again, from an historical perspective, one could look back and say, okay, what was going on in that time frame that they were able to pass on those price increases? Was there a period of innovation within bakery with new products or premiumization, and therefore you see bakery up overall food? Were we able to pass on price increases due to raw material costs or labor costs? Again, it's a puzzle, and that's what you go back historically to put those puzzle pieces together, and it helps you interpret the puzzle pieces that we're seeing right now with COVID.
Great.
Yeah, maybe I would sort of echo those comments, but from a little bit different perspective. I think you all know very well that one of the challenges of the baking industry is that it tends to be a lower margin business than the consumer packaged foods market overall. And when you recognize that as a starting point, sort of our baseline situation, a chart like this helps us see the degree to which bakers are doing with pricing and how that tends to compare with the total food business. So, Jennifer referenced this, but if you look at the last few quarters, you'll see the pricing has been up impressively, but not nearly as much as food products overall. And I think the last few months actually show why it's important to compare baked foods with the overall market. So you can see the relative underperformance when it comes to pricing. The bakers have not been able to raise prices as much during the pandemic as other food categories. And I don't have any particular reason to think that bakers are experiencing cost pressures that are more mild than other sectors. So that speaks to the other important factor to think about when you're looking at CPI. It offers an indication of the degree to which you're getting a relief from rising costs. So you really want to look at this figure in the context of ingredient costs, energy costs, and labor costs. Because when you think about the fact that ingredient costs tend to be so volatile, if you see ingredient indexes going up sharply, you don't see the CPI moving up, then you really have a very solid indicator that the baking industry is absorbing higher costs and going through a challenging period. And conversely, in a period where ingredient prices are coming down, maybe coming down steeply, and the CPI holds steady, well, that could be seen as a positive indicator for bakers and also for ingredient suppliers. But the idea that certain bakers might be in a stronger position, say, to make capital investments in an environment like that. So I think an important message is that these indicators interact with each other in important and I think pretty intuitive ways.
That's fantastic. And Josh, your Milling and Baking News team has been kind enough to contribute its grain-based food share index, which is represented here in the gold line of the graph. And you all provided that to BEMA Intel as an indicator of industry health. And just by clicking on the page, you can see the various companies represented by this index. And at your suggestion, it is plotted along with the S&P 500 in the green line as a reference point.
Sorry, unmuted. Yeah. Thanks. Yeah, you guys did a nice job of putting that together. And actually, if you think back to the very first indicator page that you showed everyone, it had all these green indicators, which are positives about the industry. But at the bottom was this one, which was the stock market, and it was yellow, which was, and it was on the negative side. And I think Jason made the point earlier that an awful lot of the data that we look at is either current or backward looking. And as I think everybody knows, the stock market is actually forward looking. It gives us investors' view of where an economy is headed, where an industry is headed, or where, more specifically, where a company is headed. And that's a really important force for our industry to track, even while we have so many green indicators. The fact that the stock market is on the negative side is something that we should probably be keeping in mind. So, what we have here is, as you said, Marjorie, the Grain-Based Foods Share Index, which is a composite of stock prices, publicly traded grain-based foods companies. And that includes everything from Mondelez and Kellogg to Flowers and Hostess, and then some of the ingredient suppliers like ADM and Ingredion. And when those are performing well, that's the market telling us companies like Hostess or Flowers or Bimbo have positive outlooks, and you keep that into context. But you also have to compare it to the broader market, the S&P 500, and that's because consumer staples are often an indicator of people's attitude toward the economy. When investors are bullish about the economy, staples actually tend to underperform, even if the companies are doing well. But if people think the economy is going to be weak, then staples do well. They're sort of a shelter in bad times for the economy. So you really have to both be looking at the performance of this index in absolute terms, but also comparing it to broader market indices.
Excellent. Excellent. Our final sample graphic is taken from the larger bundle of IRI data contained in the Industry Indicators Report. And so, of course, what we're looking at here is total packaged bakery category. And we see the dollar sales across the top of your screen and unit sales across the bottom from Q1 of 2018 through Q3 of 2020. So by hovering your mouse at the tops of each bar, it reveals the actual units for each time period. And we have the orange line that helps track the percent change between quarters. So Jennifer, you're sort of our guru on this kind of data. What are these trending data trying to tell us from a business and industry perspective?
So again, overall, this is retail, does not include food service, but it gives you historical data and trends overall of what we're seeing in the retail packaged bakery category. And just to also let the listeners and the membership know that in the full package, this will also drill down into the subcategories. We're just showing the overall total packaged bakery right now, but you can go into the subcategories that are relevant for your business and for the products that you sell ingredients or bakery equipment into. But what you're seeing here again, if you look at, let's pay attention to what we're all dealing with right now in the pandemic times. You see the bars go up, in particular in Q2. And that is when we had the full impact of COVID. And you see that overall, retail sales are up and that you're seeing unit sales are up too. But then you start to see a slight dip in Q3. So again, pull on the puzzle pieces that we all know that is going on. And in Q3, that is when we started to see improvement in COVID rates, warmer weather, people could eat outside. And so food service was starting to have some slight recovery times at that point in time. So it's like a lever or a balance. When you start to have some slight recovery in food service and people are venturing out to eat out again, you're going to have a slight decline in retail. But overall, retail is still up versus this time last year. It's also important to go even further back. So if you look at the general curves or the lines and how they show a pattern, you do still see a seasonality pattern here. So even though we have a steeper decline Q2 to Q3 now, and that is because of COVID, you still see a decline Q2 to Q3 in previous 2 years at the same quarters. And directionally, that is showing the seasonality that we see. So there's a greater intensity, if you will, of the seasonality that we're seeing because of COVID, and because from an overall ratio of food that is consumed and purchased is still skewing more toward retail. So again, overall, you can drill down deeper into the subcategories that you saw earlier of hamburgers and hot dogs, sweet bakery, donuts and pastries as an example when you have the full report that you can review.
Exactly. Thank you for that. I am going to bring us back now to the webinar. So thank you, Jennifer, and really thank you to all of our panelists. I do want to let everyone know the platform is nearly complete with an anticipated BEMA Intel launch date in early December. So we're very excited to get this out to the industry. As I mentioned earlier, I believe the platform will be located on the BEMA website. And after the initial December launch, BEMA will release an updated 3-page summary at the beginning of each new quarter. The other Intel components will be updated on a monthly or quarterly cadence as the data become available. So I hope that everyone in attendance today is beginning to see immediate uses for this information, and our team would certainly love to hear from you which data you are most eager to begin tracking. So we do have a few minutes to take a look at some questions that our attendees might have shared with us. And let me see if I can get in there. And look at those. Let's see if I can make this screen bigger. Having a challenge getting access to those. So unfortunately, I am not able to view the chat questions that people have submitted in here. I've got a tight window to make that happen. And I'm getting there. Highlighted. Let's see. Okay, our first question. How far down can you drill into each category? I believe this questioner is asking about the IRI data, and I think that Jennifer was doing a good job of trying to explain exactly how far. If I take us back into the presentation, Here is the actual indicator list, and it shows the categories that we're tracking, those product categories for IRI. And so we do have data for the bread category, which will be disaggregated for both IFB and commercial. It will also be available for, as you can see, hamburger, hot dog buns, all other breads and rolls. We are disaggregating the cookie category into ISB and commercial aisle. Pastry donuts, which you saw, cake, both fresh bakery and then bakery snacks, crackers, and salty snacks. So those are the IRI data that we are going to have in that industry indicators section. I have another question. So a person asks, now that this new and consolidated data is available for the first time in our industry, who should be looking at BEMA Intel? And that's a great question. Tim or Jason, would one of you like to take that? Who is this platform ideal for?
So just to chime in.
Go ahead, Tim.
Go ahead, Jason. Go ahead.
Impeccable timing. Yes. I think, as I said before, it's leaders and anybody who's a supplier and industry participant, because this is all about trying to understand where is the market going, where are customers going, and the future health of our industry. So if you have an interest or a stake in whether the baking industry as a whole, and then obviously being able to segment in the ways that we discussed, is going to be in an improved environment in the future or a negative environment, then you care about this. And as the questioner said, we really have never had this type of information pulled together in this way. So I think it's really broadly applicable and relevant to any supplier or industry participant.
Yeah, perfectly said. I don't have anything to add to that, Marjorie.
Okay.
It's going to be relevant to anybody who wants to understand the current state of our industry, the health of our baking industry economy, if you will.
Very good. Another question, the next question from one of our attendees, I think we're beginning to get those wheels turning with some of the industry professionals that are with us right now, as they're starting to look at these data and think about the implications of what they're seeing. And one of the questions is, if we have a 70s like inflation, will cost increases be able to be passed on to the consumer? So from what we've seen and what you all know from the data, I wonder if Jennifer or Josh might have thoughts about that. Will you be able to pass cost increases to the consumer, do you think?
I think that's always the golden question. And I think it's tough to say, because I think we've had examples where we can, and I think we've had examples in the past where we could not. One of the issues is bakery overall is a mature market, meaning it's only growing from maybe 1.25% to 1.5% per year, and that's overall aggregate level. There are certain subcategories of bakery that is growing above that. There are some that are flat. There are some that are declining. So it depends on which area you predominantly play in. It also depends on overall the economic health and how of the country and how consumers, from a perspective of dollars that they have in their pocket, are going to spend. So, for example, McKinsey came out this morning with a report that consumers are starting to buy premium products. Well, that's not necessarily because we have a low unemployment rate right now in the pandemic. That has to do with more of the psychology of the pandemic. Consumers need to indulge somehow, some way. So they can't necessarily afford a new car. They can't necessarily afford other things or even go on vacation right now because of the pandemic, but they need to indulge. So with premiumization, and products that are higher value, they can afford maybe to buy up and with more premium type bakery products and indulge. And for them, it better be worth it. They want the high quality. But that doesn't mean that they're not going to cut back in other subcategories. They may cut back in their daily bread that they use for sandwiches, but they may indulge in sweet goods, or it may be the reverse. So that's why this indice is so important, and that you look at it holistically, but also directionally at the high level to put all those puzzle pieces together. So really clear answer to, can you pass on price increases? I think it depends on the subcategory you play in and the overall dynamics of the industry.
And Josh, any additional thoughts?
Yeah, maybe just a couple macro comments to the idea of a 70s like kind of inflation. I actually think the short answer might be yes. I think if there were any executives who were active in the 70s, they probably wouldn't appreciate me saying this, but I think it was a lot easier to pass along cost increases in the 1970s than it is today. In the last 10, 15, 20 years, the power of the largest retailers, Walmart would be the easiest one to bring forward, have made it a lot more difficult for companies to pass along cost increases. Walmart wasn't even they weren't in the food business in the 1970s. So it is more difficult, but I as Jennifer said, sometimes you can and sometimes you can't. I think if you were faced with the sort of extraordinary cost pressures that we did experience in the 1970s, it would actually be easier for bakers and other food companies to pass along cost increases.
Very good. Our final question is, will the entire index be available to all visitors to the BEMA website, or will there just be some data available exclusively to BEMA members? And that is a great question, I think, to end on. The 3-page summary will always be publicly available and housed on the BEMA website. And the other 2 sections, the deep dive, the industry indicators section, that 30 plus pages of detail, current and historical trending, and the member pulse, those will both be available exclusively to BEMA members. So we're hoping that this tool is, and believe that this tool is powerful enough to be a very strong incentive to BEMA membership, to increasing BEMA membership and engagement. So keep that in mind as you mull over this tool that we've just introduced to you. I think that concludes our panel discussion today. Again, keep an eye out for BEMA Intel. We will be launching in early December. So thank you again to all of our webinar attendees and to my teammates today, to Tim Cook and Jason Ward, Jennifer Lindsey, and Paul Lattan, and Josh Sosland. Thank you to each and every one of you, and please enjoy the rest of your day.
Thank you.
Thank you. Bye-bye. Be well.